This is Morning Stock Watch with the weekly report for the week ending March 6, 2020. This report includes the broad market along with Netflix and Tesla, starting with the S&P 500 ETF SPY. Weekly closing price $297.46, up 0.4%. It was a crazy week for the market. News for the market continues to include coronavirus fears and now Democratic primaries. The weekly chart for the SPY shows that this week's price candle was a pretty wild-looking spinning top with very long wicks on both sides. This shows a lot of indecision and fear in the market. However, we still are above a huge amount of support shown by the green cloud, lower Fibonacci retracement, and a 100 weekly moving average shown on the chart. To get a better sense of what happened with price this week, we look closer at the daily chart. As we can see on Monday, we did have some upside that continued from Friday's end-of-day rally. Price made its way up to the resistance cluster of the moving averages and the center Fibonacci retracement near 315 for a rejection there. The hourly chart, we see price make its way through $300 resistance with no problems, came down for a retest, and then a smooth ride up to 313 or so. It made a diverging triple top, which persuaded selling back down to $300 support. We had another attempt at breaking resistance but failed hard, selling below $300 to lows of $290. Friday, we had one last super rally at the end of the day, closing the week just below the low of 297.57, which was set on the 3rd, closing the week at 297.46. On the weekly chart, we already know about the strong negative divergence that's playing itself out right now with all of this new volatility in the market, so we could easily have much lower prices ahead of us. On the smaller time frame charts, we do have a couple areas of bullish divergence that will likely give price another run up to 315 or so. Shifting focus to other areas of the broader market, simply looking at the weekly candles in comparison with the S&P, we can see that the financials and the IWM lag the market while utilities led. Of all of the sectors of the market, the financials usually trade the highest volume, so it's a big influence on whether or not the markets can make certain numbers, whether a trend can reverse or continue. The IWM, our small cap stocks, are also really great at indicating the condition of the market. All of the ETFs shown, with the slight exception of the utilities, are more or less on par with the bearish threat to the market. Looking at the VIX, we're starting to see a lot of upper wicks along with bearish divergence. This is bullish to the overall market. Generally, as the VIX grows higher, so does the volatility. Since the market can and always fall way harder than it can climb, the VIX, it's safe to believe that the peaks in the VIX are market crashes. This current crash that we're in now have two peaks that are both overbought, while the candle bodies are diverging from the oscillator's peaks. This is bullish development. So let's go back to the S&P. Where is it going? Things have been very bullish lately, but now for the coming weeks, it looks like we'll have some upward movement. Last week, we believed that the move to 315 would be a lot more steady, but why on earth did I think that during this kind of market? However, we got a swift move up and back down for a higher low double bottom setup. With all of the sectors as well as the VIX pointing to a turn of some kind, we could see price make its way back up to the 315 area. And who knows, it might even be able to break its way back above for further upside. The other side of this, which is not as probable, is that we immediately break lower. Break right on through all of this solid support just because, or with another unpleasant surprise in the news. It could happen, but it doesn't look likely with what we have setting up right now. So to my other favorites, next is Netflix. Weekly close price $368.97. Netflix looks very unique to most charts right now with the current market. Netflix did come down with the market, but not considerably. To be honest, it almost looks like Netflix is completely unfazed by this crash, and it's just going through its normal price movement. Price is stuck in a range between $358 and $392, struggling to close above the resistance at $385. That's what it's trying to do. There are a lot of upper and lower wicks that's giving off the impression that it could do anything. It could break back below the wedge in the direction of $300 or lower. Personally, I'm bullish on Netflix. It had plenty of opportunities to go lower, but decided to keep put. However, anything consistently below 360 or anything that looks like it can't get back above the moving averages as it gets closer to the wedge support will be bearish, as traders will start to believe that this is a top, selling it back into the wedge. Again, we need to see this close consistently above 385. And last, we have Tesla. We have a bearish triangle with a flat bottom. This was my first guess. And then on Thursday, for some reason, I started to get myself to see a descending wedge, which is more likely to be bullish if that was the case. I'm not sure why. Sometimes the brain just wants to see certain things. And sure enough, we had a pretty deep gap down on Friday, which turned out to be a bearish triangle. Even looking into the aftermarket on Friday, things continue to look bearish. However, it looks like there could be a bounce coming for Tesla somewhere in this area, with movement definitely moving above 720 resistance and likely at or over the highs of the wedge. It looks like lower prices could be made on Monday's pre-market, but with all the bullish developments in the market, down to 665 looks like a good area of support with possible movement back to over $800.